Joining us now is Freddie Smith. He's an actor. He's also an economic commentator. You may know his acting career from Days of Our Lives, but he also has a book coming out called Generation Effed. Freddie, thanks for joining us on the show. Why am I screwed?
Well, I think it just boils down to the American dream. I think there were decisions made, definitely a lot of decisions in the 80s. And that's basically what I break down in the book is what were all the little things that led to the typical essential worker having a harder time achieving the American dream. And I think it just boils down to the policy decisions, to putting shareholders over the people. And I think the biggest problem that we have when we talk about the American dream in the middle class is that it is now an unreasonable time frame for the typical worker to achieve the American dream. So as a headline, it's dead, but the more nuanced is it's just an unreasonable time frame for someone who's a typical worker to achieve it, unlike how it was way easier in the 60s, 70s, 80s, and 90s for a typical worker.
So I think one thing I would say to that, and I've heard some of your conversations on this, where there were policy choices in, let's say Reagan era that still have ripple effects to today of trickle-down economics. I think that amongst broadly in society, most people kind of feel that that's not exactly true. However, there's also sort of a neat correlation with the rise of personal computing devices in the 80s and also the sort of evaporation of real wage increases. So one theory that I've not heard that I think lines up pretty neatly is there's also a strong correlation that as technology has risen, especially personal computing and computing power has grown, you've seen that evaporation in real wages, particularly for people who aren't college educated, but even for those who are and don't have a super high level master's degree.
Oh, yeah. I mean, that's the biggest thing, because people will try to, do the inflation marker of like, this is what wages were and this is what wages should be. But when you compare it to the GDP per capita, the technological advancements, the productivity, and then the big four, this is what I focus on the most, which is housing, daycare, college, and healthcare. All of that has exploded and wages have basically been flat compared to that. It might not be flat compared to groceries, but groceries feel expensive because people are spending $2,000 a month on rent. So it's definitely a wage problem, and the money has just been sucked to the top. And if I can just give you one statistic, because this is still the one that blows my mind the most when it comes to trickle-down economics or the wealth inequality. In the late 70s, all Americans combined, adjusted for inflation, had about $40 trillion of wealth. Today, we have about $180 trillion of wealth. So there's been $140 trillion created in the basically 50 years, and only $2 trillion made it to the bottom 50%. And the bottom 50% has gained 60 million more people over that time. So the bottom 50 has 5 trillion, and the top 10% has $120 trillion. So when you talk about trickle down, I go, sure, a little trickle down, but not as much as it needed to be. There needed to be about 20% more over 50 years organically that trickled down for us not to even be having this conversation.
That bottom 50% is basically one SpaceX.
Yeah.
Because that's 2 trillion.
Mm-hmm.
Yeah, it's one SpaceX.
I think it's up to like 4.5 now, the bottom 50.
2 SpaceX.
That's so much better. Right.
Yeah, it's much better. 2 SpaceX.
That's a SpaceX, an Anthropic, and an OpenAI, basically.
Yeah. And it's just they don't have that. And the sad part is, like, if you don't have the wages to invest meaningfully, then you're never going to get out of the bottom 50, because in order to get into the top 50, you need assets. You need to be able to buy a house. You need to be able to invest in the stock market. And if you don't have enough money at the end of the month to meaningfully do it, like actually putting in enough money to make a dent in your retirement. And so that's why I'm really bullish on wages, and we can get into that later, that I believe that's what we should all be promoting. But I also think that it's going to be difficult to do. And I'm leaning more towards changing our tax code, as I believe will be the solution. But the simpler, like right now, could be if there was incentives to increase wages for the typical worker.
Yeah. I'm gonna come back to that, because Ricky will tell you I love talking tax policy. Like, I say that not ironically at all. However, as you talk about shareholder capitalism being the thing that kind of broke the system, is it not then the right response to increase the pool of who participates in the growth engine that is the U.S. stock market? Said a different way, we just finished talking about these IPOs that are going to happen, that are going to raise all this capital. And what they're going to do is create a ton of millionaires who are the early employees of these different AI related companies that are going public. It's been happening since the 90s, right? As the dot-com boom and bust happened, lots of people became millionaires from being early Amazon employees or early Google employees or whoever. So wouldn't the right answer then, instead of raising cash compensation, be to increase non-cash compensation, restricted stock units or incentive stock options or whatever else, as a mechanism to allow people to participate in the growth of the companies that they decide to go and work for?
Sure. I mean, if those companies offer something like that or could, then absolutely paying in stock would be just as good as wages. But I think there's just two separate conversations going on. And I do believe that on one hand, there's never been a better time to get rich than in 2026 because of our resources and the growth of our stock market and GDP. Mm-hmm. But at the same time, there's about 80 to 100 million Americans, again, to use the word typical, essential, those folks are the ones being left behind. Like the people that you just drive around DC and you go grab a cup of coffee, the people who are doing the roads, the people who are working at grocery stores, like all these folks make $40,000 to $60,000. Mm-hmm. And those are the ones that I'm really fighting for that are left behind. However, there has never been a greater time for people to make $200,000, $300,000, $400,000, $500,000 a year. But not everybody in America, unfortunately, can do that because the jobs that are essential don't pay that. So would there be a way for a lot of these essential jobs for those companies to pay in stock? I'm not sure. Definitely with the tech companies, it seems like a regular thing, but I'm not sure about across the board.
Maybe for like a company like DoorDash, I think that's where you two can meet in the middle. But then you'll have a company, like a lot of companies that, where you have essential workers, let's say Kroger, which I want to bring back up later, you can be paid in Kroger stock, but that's not going to explode. If you're stocking grocery store shelves, that stock is not going to explode like an early AI company. And another issue we've brought up on the show, and maybe this is picking nits, but actually, no, it's not picking nits. It's the fact that regular people, and I would say even those who are in the essential worker category, they are kind of stuck within the current stock market and they have no ability to get into these tech companies where the real growth is happening. OpenAI, Anthropic, Stripe, SpaceX, were all able to grow into these multi-trillion-dollar behemoths or trillion-dollar behemoths, and regular people who have, just 401k funds saving for retirement in their 20s, 30s, 40s, they have not been able to participate in that in the same way that previous generations were able to, participate in the American economy where companies were going public sooner.
Absolutely. I mean, that's well said. I mean, I think that's what it all boils down to. Is just how do we get, because even if you're investing in your 401k, I just put out a video today that if you make $50,000 in this country, which is, about 80 million people make 50K or less. And even if you're investing in your 401k, have your employer health insurance, and you're doing the average of a used car, you have no debt other than your used car, you've got about $150 a month left over.
Yeah.
And so even if you do have stock, if you are investing in your 401k, there's still, because rent and healthcare is so expensive, it's really putting pressure. So that's the solution we need to find.
And I want to get to healthcare, and we've talked about the Michael Green piece on Substack before that lays out why it's basically that a family of four in the United States is better off making $35,000 a year than $100,000 a year. But one idea that is somewhat radical that you have offered that I think Malcolm will have an opinion on is that you want to ban stock buybacks altogether.
I mean, I just look back to, when they weren't really looked on very, very fondly. And then they eventually, I think it was 1982, somewhere around there, that they kind of gave the green light to do that. And it just seems, I think that's something that if they could put that money directly back into the hands of the workers with wages, that would be a really good thing. When I think it was like $1 trillion last year was spent on stock buybacks. And to Malcolm's point, and I love that we're going back and forth on this, I'm sure you're going to point out too, that a lot of people in the stock market, ordinary people, are getting the benefit of those stock buybacks. But when we have a wage issue, my whole thing was, why are we doing stock buybacks when that money could be going towards wages or improving the work conditions for the folks in today's time? Maybe stock buybacks worked decades ago when the middle class was thriving, but it's just something I think should be looked at in 2026. What's your take on that?
I'm about to surprise you both and go in a completely different direction, because I actually think
pivoting.
I I don't mind stock buybacks, but I think it's a lazy use of capital. I actually think that, going to the point that I was making before, if I am a shareholder in the company and I'm an employee of the company and I'm being paid in stock, one way that you put cash in my hands, regardless of what direction the stock goes from point to point, is to increase the dividend. So rather than buying back additional shares of the company's stock to artificially inflate the price and reduce float, just increase the dividend. Like, I would love to own shares of Berkshire Hathaway as an example, based on their track record, which, you know, obviously 100% ties to Warren Buffett's performance and no one else's. But the thing that stops me from ever pulling the trigger on buying that, excuse me, how could I forget Charlie?
Okay.
But the thing that stops me from pulling the trigger on it is I feel disrespected as a potential shareholder that they now have like a third of all of the capital under management at that company sitting in cash and cash-like investments rather than just returning it to the shareholders in the form of dividends. And I think that if I am a person who owns shares, forget tech, for example, if I work for an energy company, here it's Pepco, Baltimore Gas and Electric, you've got Duke Energy, you've got a bunch of them up and down the East Coast, out through the West. It's a very fragmented industry. But if any of the utilities decided we want to pay our linesmen in shares of company stock in addition to their cash compensation, we want to pay the, call center workers, whoever, like all of them in shares of company stock, I think that they'd be happy to receive that, because what you also get with those shares is a pretty healthy dividend, because utilities famously pay pretty significant dividends. And I think that could be the case for an Apple or a Microsoft or a Google or whoever. In addition, forget $100 billion worth of buybacks year after year after year like Apple does. Increase the dividend and make it more attractive for everyone to participate in that, regardless of where they sit as far as their net worth.
This episode is sponsored by Capital Area Planning Group. Capital Area Planning Group is a fiduciary wealth management firm that specializes in helping high net worth individuals and families navigate the complexities that come along with managing concentrated stock options, multiple income streams, and an ever-changing tax code. While our team of certified financial planners are well-versed in all things personal finance, our areas of expertise include equity compensation, estate planning, and multi-year tax planning. At Capital Area Planning Group, we believe in pricing transparency. That's why our fees are posted on our website, right alongside the various services we perform on behalf of our clients throughout the year. If you're tired of receiving the same cookie-cutter advice from your financial advisor, then don't wait. Reach out to us today at capgllc.com to experience a better approach to wealth management. Again, that web address is www.capgllc.com.
So I think my pushback on the banning stock buybacks piece is, I don't know if it would lead to workers getting paid more. I think that's a different issue because, okay, let's say to Malcolm's point, he brought up Berkshire Hathaway. Okay, so we flat out ban stock buybacks. That idea rolls through. What would I expect our corporate overlords to do? Would they immediately give a raise? Or would they just build up cash on the balance sheet? And then those companies are also valued by the cash they have on the books. Would they start issuing special dividends and regular dividends? And there's a benefit to that because it's taxed differently than stock buybacks if that's the goal. But I don't know if I believe that banning stock buybacks ultimately leads to a better outcome for the workers of those companies.
If we can't do stock buybacks, I am 100% certain that all we'll do is reverse stock splits way more often than what we're seeing today. So we'll still figure out a way for the mechanics to lead us to the same place rather than having to increase the wages of the worker. Because right now, Wall Street is rewarding every single publicly traded company for becoming more productive year after year. And what I mean by productive is squeezing more revenue per full-time employee than what you were able to generate the year before. NVIDIA is the absolute best looking company in the entire stock market right now based on this. They generate about $4 million per full-time employee, which is just, everybody would love to be sitting in that same position. The next closest is either Apple or Google, and it's like $2.2 million per or something, not even close, right? So then you come all the way down to the non-tech related names, and all these companies generate, I don't know, a few $100,000 per employee. They're trying to figure out a way to cut headcount to get that productivity number higher. So all of that is the reason I'm very certain in saying to you, no one's going to immediately raise wages on behalf of employees because stock buybacks got banned. We will just use the other tool that we have in the toolbox, which is a reverse stock split, which gets us to the same place.
And I think that's the fundamental, what I would believe is the issue, is there's always going to be a way when we have shareholder value as the number one priority and Wall Street as the number one priority, the rich will always find ways around it. That's why even people would assume I'm for the 5% wealth tax. And in theory, sure, but you're not going to get 5% from the billionaires. And if you did, the government's not going to spend it appropriately. They're going to find ways around it. It's kind of their whole thing, legally avoiding taxes. So, but I do think it's just one stepping stone of trying to reposition how our country operates, and stock buybacks, getting rid of super PACs. Even another one I'm not that big of a fan of, but I think it's interesting to talk about is taxing borrowing against your assets if you're at a certain wealth level. But again, that can, you'd have to figure out how they're going to escape doing that. Do they do it in smaller portions to avoid it? Or if you try to tax people if they're buying multiple properties and at closing, you kind of do a little fund where an extra 1 or 2%, if it's your second, third, or 10th or 100th property, goes into a city or state fund to help first-time homebuyers as well. But do they just then create LLCs to avoid that? Like, all of that would have to be worked out. But at least it's better than just like, well, this is just how it is. Let's let the wealth inequality continue to grow. And if we touch the billionaires, they'll leave. If we touch the billionaires, they'll fire people. If we do this, the prices will go up. It's always kind of the same thing, because we're just juxting for the main goal in America, which is capitalism first, shareholders, and the bottom line rather than the human beings. And I think there's more of a way to just shift it. I'm not too extreme, but I think there could be a dial turn just a little because of all the growth. We need to allow more Americans to share in the prosperity.
So I think there's a fundamental issue, and we both agree on that, which is that the bottom half of our country is in an extraordinarily bad place for the most part. Simultaneously, you have this moment where the national debt eclipsed our gross domestic product. So we have more debt than what we make. And what that leads to is this further squeeze where, I'm 30 years old. I can pretty much guarantee that I will not get the level of Social Security benefits that I pay into. And simultaneously, I'm going to be paying out into a lot of government entitlement programs, Social Security, Medicare, Medicaid, plus national debt. And then you get to a place where, we can pretend like it's sustainable for a while, but ultimately there's a breaking point where nobody knows when, and nobody knows exactly what happens after that.
And I think the interesting part about this, I'm curious what you guys think, is how significant are you pro AI? Like, do you see an optimistic integration at scale over the next 5 to 10 years, or are you guys more pessimistic about it? Because the only thing I heard, like if you hear someone like Elon, where he basically says the only way out of this is to grow out of it, and that's like, what's your guys' take on AI? Do you feel that would in any way create a version that would solve that issue at all?
Of inequality?
Yeah, of just being so productive and being able to do UBI or bringing in so much revenue that we could start paying off the national debt or something like that. Like, it's so good and so optimistic and so utopian that it's going to change the world. Or do you feel it's just going to be more of what happened over the past 50 years as technology rose, the top just kept more, the bottom got less, and this is just going to exacerbate that more?
I'm more towards the latter than the former, but I can let Malcolm dig in.
Oh, heck no. I think realistically, it's going to lead to more people being out yelling about they took our jobs. And this time the they is going to be big tech, and Silicon Valley will become the big bad wolf in this case, instead of, the coal companies that shut down because of renewables, or the steel company that left Pittsburgh and went over to China, or whatever the the boogeyman has been to this point that helped the Rust Belt get angry enough to elect Trump the first time. I think all of those feelings of we've been left behind will shift to more people in white collar roles that traditionally had been able to get entry level jobs doing the things that AI is capable of doing at this moment. And so you have an entire generation of people who will share that ethos of the system has screwed us. And I don't think that it's gonna suddenly be improved because the free cash flow that gets thrown off of AI productivity has created this new mechanism that we're able to return capital to the U.S. shareholder. I think that realistically, the government will figure out a way to keep it for themselves, or those that participate in the ecosystem will be in good position, and those that don't will be in worse position, or the way that I keep saying it, like this K-shaped economy that we have. The K is just going to keep on K-ing harder and harder.
Yeah.
And what I would add to that too is just, the real economy is consumer spending, right? It's like 68 to 70% of our economy is consumer spending. And economic growth is fundamentally tied to spending on AI right now. It's the infrastructure build out. But what's that infrastructure build out actually leading to? It's, Kevin O'Leary's data center in Utah, where we're going to take up almost all of the electricity that Utah produces in a single year, try to convince you that it's a good idea. But that's not a build out that ultimately leads to thousands upon thousands of jobs. So it's that squeezing effect. And I'm trying to find almost like how do you find solutions out of it? I think there are individual solutions that I can get into, that I can bounce off you later. But
Hang on a second.
Yeah.
How did you know the crypto winter was coming when it did, when Tom Brady and everyone else was doing
the Super Bowl
Bitcoin
ads?
exchange Super Bowl commercials?
Yeah.
A Kevin O'Leary data center is probably a canary in the coal mine that tells you this whole thing is very quickly coming to an end. The moment you see The Rock's face on a data center commercial, just know the ship has sailed.
Yeah. Do you want to reflect on that, Freddie, or I can get to your tax ideas because I know that's something both of you want to get to.
Yeah, we can do it. We can do the tax ideas because I'm just open to that. I think that's where we have to look at.
One of your ideas is, and we'll see what Malcolm thinks of this, because I think it's interesting, and I don't know if I agree or disagree with it. Which is that you would basically you're proposing to get rid of payroll taxes and replace it with a 10% tax on gross revenue, which that idea would be radical. There would be immediate dislocations for something like the example I'll use is a grocery store company like a Kroger or a Costco. They would immediately have to raise prices because they're on extraordinary thin margins. But, is that made up for by workers saving functionally, that'd be about 14% more money at least. And would that actually bring in more revenue than the current system?
So this is one of my takes. I have a few different things. So I'm just trying to play around with the tax code just because I'm not a huge fan, like I said, of the 5% wealth tax. I don't think that's going to solve anything. I'm trying to drastically even everything out and make it just simpler. We have enough people and enough revenue. We can make this simpler. So my whole pitch, and I'm not a politician here, this is just a thought experiment. Not only payroll, I mean all taxes. All federal taxes completely disappear, including corporate taxes, including federal income tax, and including payroll taxes, and you replace it with a 10% gross revenue. Some companies will be able to handle that. Others would have to raise their prices. But it would generate about $6 trillion if we implemented it like that, which would be about $800 billion more than what we're already doing. So you could keep all the entitlement programs, keep the child tax credits, keep everything we have. And with that extra $800 billion, you could start the inevitable, which I believe is UBI for the folks making $50,000 and below, and put that $800 billion towards that. And I believe when you put $5.2 trillion back into consumers' hands, would we have a trickle up economy because we're going to be spending so much money because we have so much more to spend? And then next year, the revenues would be higher and higher and higher as AI gets implemented and it gets higher and higher and higher. We're all kind of sharing in it. But I think one of the biggest negatives is, of course, you would have to raise prices anywhere from 3 to 10%, depending on the company. And my argument for that, and then I'm curious on your guys' first opinion on it, is if I've ran simulations of different kinds of companies from small, medium to large, and some companies, it's 3% that they would have to raise it in order to keep the same amount because of how much they're saving by getting rid of other taxes. Some might be 10%. But I don't think Americans would be upset if a television went from $200 to $220 if they're keeping thousands of dollars. Or if you go and get a burger for $10 and now it's $11. It's when you're keeping thousands of dollars. So I think it'd be interesting, but the greatest thing is that it would bring us together where we'd be rooting for the companies to continue to grow because we're all participating. And I think it would heal that divide. And it would also just simplify the tax code because it just feels like the billionaires and the multi-millionaires are able to use the tax code to avoid taxes altogether. And at least this would make the corporations and all the businesses, they'd be the ones, paying for it all. And we would be paying them back by being massive consumers and having more money in our pockets. So that was kind of my elevator pitch of it.
Sure.
Oh my God, there's a lot there.
Yeah.
Like
first of all, I just want to reflect on the fact that, Freddie, you went from being on a soap opera called Days of Our Lives for about 10 years, and you are now arguing about radically changing the tax code with two podcasters. How did you get here?
Something went incredibly right or incredibly wrong. Yeah, just a side note. I mean, I was on the show for 10 years. I got laid off 3 weeks before the pandemic. And so I was like, well, how long is this pandemic going to last? I'm not going to stay in California and spend all this money. Let's go to Florida and just take a little hiatus. And ended up, having some financial trouble the first 2 years after the pandemic, and then got into real estate because I was like, I got to make some money. Let's get into being a realtor. My wife and I did very well for the 2 years that we were in it. And it led to me starting to talk about real estate and the housing affordability crisis on TikTok and Instagram and YouTube. And it just started continuing to roll naturally where I just started researching more and more. And 3 years later, 1.5 billion views later, and a book coming out, it just turned into this new thing. And now I'm arguing about tax plans. But this is like my passion.
Yeah.
I don't know if this is going to take a turn to like full-time career or if I'll be able to do other things and then just have this as my passion project and just be part of the conversation. Because I study all this stuff even if I don't post it. Like I'm just fascinated with continuing to learn. So that's how I got here. But I'm happy to be here, guys. I'm excited to hear. I'm excited to hear your thoughts on the taxes.
Okay, all right, so I'm going to ignore the Mamdani-esque references to UBI for 2 seconds, Universal Basic Income, for those who haven't been following since Andrew Yang fell off the face of the earth. So that aside for 2 seconds, payroll tax. So my overarching thought as you were describing this is that is way too hard to ever be possible. And what I mean by that in the plainest terms is our collective intelligence as a country is so low that we'd never be able to understand why it's in our best interest. Even if what you just described makes us 10 times better off, we'd never be able to understand why it's going to make us 10 times better off. All we know is it's such a significant change from what we know to be true, the way we pay taxes today, that I don't like it. Like that would be the immediate knee-jerk reaction by like 75% of US citizens. That's one thing. Two, I actually don't think messing around with the payroll tax is the way to get to what you're after. I think that, ironically, I saw Jeff Bezos giving an interview to Andrew Ross Sorkin at CNBC recently, right? And among the things he got beat up for, what he kept pounding the table on was people below a certain income threshold shouldn't pay any income tax at all. And in reality, that population of people, $75,000 or less, I think was his sticking point, shouldn't pay income taxes. In reality, like not too far below $75,000, most people don't actually pay income taxes once they do file and get the standard deduction, but they don't realize that they're not paying income taxes, based on how much they got back as a refund versus what got withheld from their paycheck. I don't think that you want to be tinkering around too much in the payroll system. What I think realistically helps to solve this problem we keep going back and forth on is actually just a flat corporate tax. Like if we have a space where, you know, Amazon, as my example, since I'm talking about Jeff Bezos, I can't remember which year it was, but maybe 2022, they received a tax refund of like $100,000. If a company like Amazon was forced to pay just 10% flat corporate tax, no matter what, that would significantly on profits. Not on top line revenue. That's too complicated because top line revenue can be misleading. What am I going to do to make up the tax bill? Fire a bunch of employees. That's not really going to get us to where we want to be, which is full on employment, or at least increasing, you know, wage growth, right? That's not really going to get us where we want to be. The worker's still going to be penalized for this. But I think if there was a flat corporate tax on profits, on ordinary profits, that would be a way to make sure that the playing field gets leveled a little bit more. Some of the dollars that today go towards share buybacks instead of anything else would be going toward that flat tax. And that affects us in the form of having to pay increased prices and those sorts of things like you were talking about before, but not as directly, I think, as payroll tax being eliminated and us paying.
It depends on what that would raise and what that would give back to the people.
Sure.
You know, because that's my biggest thing when it comes to raising taxes on the rich per se. I'm for it, but not enthusiastically for it because I do believe the government would waste it. But if you were to eliminate taxes for even the first $100,000, I have another plan that's actually in my book. The 10% gross revenue is not my number one. I have another one in here that I actually wrote about that's similar, but it's broken down a little bit, I think, easier to pass. But even if you got rid of the first $100,000 of taxes, I think that would help the Americans, the everyday American, if we weren't taxed on the first $100,000, including payroll tax, which I know is a huge amount of money and it would have to be made up. But if you were to raise the taxes on the people making a million and more to cover that first 100,000 of everybody, that would make more sense rather than just confiscating wealth from billionaires and giving it to the government to do God knows what with. But that's where I land on it. I just think that I don't know how else you would give the money back to people in the middle class without doing that. And
I think we might be in agreement there. If we got rid of the first three tiers of income tax bracket, so the 10, 12, and 15, and just start everybody out at 22% at whatever that number is, $90-something thousand, then let's just start there. And everybody below that threshold. But what you do encourage unintentionally is a lot of people to be doing a lot of questionable things to get their income artificially below that threshold every year to help make sure that they fall into that parade. Because who has the money to afford to be able to do things like create excess losses from short-term rentals or whatever TikTok is telling doctors to do now? Like the people who are making $1 million a year. So it won't be a catch-all, but I do think it would create quite a bit of relief on the people who you're talking about who are most affected.
Or even increasing the standard deduction, maybe. You know, I mean, something that just allows the first $100,000 to not be taxed. You know, because even if you make $200,000 right now, you're paying. If you're a W-2 employee making $200,000, what do you pay in total taxes for federal? 50, maybe 60. If you weren't
or more.
Yeah, if you weren't taxed on the first $100,000 and only taxed on $100,000 after it, that might bring it down to maybe 20. So even those folks would make tens of thousands of more, but then everybody under 100,000 wouldn't even have to file taxes if you got rid of the payroll and the federal. But I think that's where we have to go because it's not even a handout anymore. You know, some people are so upset about the entitlements, but letting people keep the money they're actually working for is the opposite of a handout.
To Malcolm's point, I mean, I think you would prevent some of those games by making it a marginal rate, not a total rate once you pass 100K. But I mean, my broad reflection on this is that there seems to be an impossible divide where Republicans are allergic to tax increases and liberals are allergic to the idea that there may be massive amounts of fraud in the government. And the only way we've sort of gone about it so far is Elon Musk running in with a chainsaw for about 4 to 5 weeks. But there are fundamental problems with the way we spend tax money right now. And you've often heard that from wealthy people of, I'm happy to pay more in taxes, but why aren't my roads getting better? Why aren't the schools getting better? Colorado, for example, because we have some interesting incentives. I'm not going to call this corruption. I'm saying this is an example of a broken system, is that our Medicaid program spends more money on autism therapy every year than it does on emergency room visits. And that's because you have a growth of a specific type of therapy called ABA. You have private equity getting involved with that, realizing that, hey, we can do a ton of treatment, and there is mixed evidence on the effectiveness versus other types of therapy. But you have these sort of incentives to spend huge amounts of money on things that are a little bit, that have some question marks. And so I think that there needs to be a combination of like, okay, transparency and what things are actually being spent on. That's one reason you saw, Spencer Pratt at least had some Democrats shaking in their boots, which is, why are we spending so much on homelessness in Los Angeles, but things aren't getting better? Those are the questions that people have specifically when it comes to taxes. And I think there are other ways of doing more like plugging the holes than versus just reverting the whole system. So, I mean, one of the biggest problems I think is that, to your point, work is taxed worse, or work is punished more by the tax system than capital gains and investment income. So one example I've done before on the show is that if you are a person in their 30s making $120,000 a year, you pay about as much in taxes as a married couple in retirement that makes $240,000 per year. And you think about the younger person, and that $240,000 comes from dividends, 401k distributions, and Social Security. That younger person is the one who is buying stuff, that wants to own a home and wants to raise children. But the way that the system is set up, that you end up in sort of discouraging that labor. To the point of standard deduction, that's something we've seen a dramatic difference in as well, which is that your standard deduction when you were young is it's 16,500. Then it's 33 if you're married. Not for some reason. If you're blind, you get an extra standard deduction. I think everyone's cool with that. If you're blind, we'll give you a little bit of help. But then seniors got an enhanced senior deduction, and then they just got an enhanced senior deduction that's supposed to be temporary, but good luck ever clawing that back. So I think it's, how do we think about taxing income from wealth versus income from labor, and then, plugging some holes in real estate, maybe with the way we tax like-kind exchanges for business properties, private foundations that really, really rich people set up and then want to protect hundreds of millions of dollars for generations to come. Those are the harder and more boring ways to go about it that are going to be impossible to get through Congress as well. But I guess that's where my mind has previously gone on the tax system.
And I think we all feel the same way, and some of the things that you said too, like even when it comes to the rich people, when they, even like the step up in basis or something like that, if you were to try to eliminate that, so you'd have to pay, once it's inherited or whatever, it still goes back to the fact that the government spending, that we don't have the holes plugged. Like my number one, like if I had to say anything about taxes is getting rid of them for the first 100,000, or getting rid of them altogether with something extreme like the 10% gross revenue and keeping it on the business, because it just simplifies the whole system.
But the tax lobby is strong. And that's why I say a lot of what you're talking about is unlikely to come to fruition. Just look at the fact that the IRS tried for 4, maybe 5 good years to implement a free file, where if you have a very simplified tax return, you don't even have to bother worrying about paying TurboTax, which is supposed to be the cheapest, most simplified solution out there. You don't have to worry about paying them $50 to $100. Just come to us and free file, and we'll take your return. That got killed because the lobby is so strong, and the money that Intuit and others stood to lose from that actually getting taken up, that they were doing things to obfuscate the free version on the Intuit website when you went to TurboTax, to the point that people couldn't tell whether they needed to pay or if they were eligible for the free version. And the lobby basically made it such that the IRS and the rest of the US government turned a blind eye to it and said, we give up. So literally they just announced end of the death of free file. So to your point, like, there's so much money to be made from the people who operate in the spaces that you're trying to take away the friction from, that the likelihood of that being the place that we get the reprieve, less and less.
I mean, I agree with you 100%, but I think if we were all to get on the same page and be able to go, well, that's the problem. That's our hurdle. Like you're yet to hear any politicians, like they'll usually come out and just say, I'm going to give everyone $1 million and everyone cheers. But they never say, here's how, here's the challenges, here's what we need to focus on. It's more of an emotional, like, vote for me kind of thing. And even with that, if I say like no taxes on the first 100,000, you would have to bring up the lobby is going to be a big hurdle. Now let's focus on the solutions to combat that, defense. And just try to make a fundamental change, because that's the same thing. Stock buybacks, super PACs, lobbying, changing the tax code. I mean, we're up against, how hard that all is to do. That's why it's probably never been done. But it keeps things only seem to be getting changed for the betterment of the people in the top 10% and people who can participate in capitalism at a meaningful level. And I just think it needs to be recognized a little more by the politicians. They kind of just throw out like, we'll give you more stuff from the government, but I'm not sure if that's the way. I want people to keep their own money.
I want to go back to something that you alluded to earlier, Freddie, because I think it's a place that the three of us probably agree the most, which was the fact that we have a housing crisis right now in the United States. The housing market has been locked up pretty much since the government started raising interest rates back in March of 2022. So more than 4 years now, even though the 10-year treasury is usually what drives the housing market. It's not the short-term treasury or the monetary policy that determines this. It's inextricably linked in this period of time. So for 4 years, people who wanted to buy a home have been basically shut out because interest rates are so high, and the lack of supply coincided to make it almost impossible to buy a first home. If you already have a home and you want to get your next home, there's a lot of mechanisms out there that have been able to help. And really anybody who doesn't have the bank of mom and dad to rely on hasn't really been able to get off the renting ladder and purchase in the last 4 years. But this is a place where I think tax policy could make all the difference, because usually the government has a habit of subsidizing the behaviors that it wants to see. So what I mean by that is, we want investors out there in the population. So we tax capital gains lower than ordinary income. Or we want businesses to be formed and created so that people have jobs, because the government can't be responsible for creating jobs for 300 million some odd citizens. So we incentivize people to take that risk of starting businesses and give a whole bunch of tax breaks. We want housing to be built. And so we incentivize real estate investors to be able to build housing stock for U.S. citizens. And I think in this case, one of the things that's very obvious to me that would make a huge difference on day one is if we were to create a tax holiday on the first million or two of capital gains from selling individual properties for mom and pop landlords. So Ricky was talking about the 1031 exchange, where I can just take a like kind property I own, sell this one, get into the next one that cost a little bit more, and now I've deferred those capital gains forward for another decade or two, right?
Only business properties.
Well, if instead, no, if I own real estate as a real estate investor, I own 10 single family homes, I can do a 1031 exchange on each one of them and roll those cap gains forward and never pay taxes because of the whole step up in basis, right? My kid's going to inherit my position at some point. They'll never pay taxes on that asset, and here we go. But I think if we created a tax holiday where on the first million, 2 million, whatever it is of capital gains that you have embedded in that portfolio of properties, it won't necessarily benefit the institutional manager of single family homes like we're trying to crowd out of the market today, but it would incentivize the boomer, for example, who's 75-ish years old, has acquired 3 or 4 properties over the last 4 decades that they've moved around the country and done everything else that they do. But they're terrified to sell any of those properties right now in their lifetime, even though they would love to get off the clock of having to be a landlord. And that's another way to relieve the housing stock that exists right now that's keeping prices artificially high and also crowding out younger people who want their opportunity to join the property ladder.
Freddie, I'm going to let you talk for as long as you want.
I mean, either way, on housing, I mean, we could do a whole podcast on housing, but I actually really like that idea because instead of selling one property and then 1031 exchanging it to another, some people might, if you gave them the holiday or allowed them to not have to pay taxes on the first couple mil, they might just take the money and go invest it somewhere else, and that house now becomes available.
They 100% would.
Yeah, and that's kind of the whole game. So I think that's super interesting. I think the headline with housing is always that we need more supply, but I don't see a way, unless again there's more incentives. But I don't see these home builders building smaller homes, or if they do build, I've seen a few communities, maybe even Denver. Or maybe not Denver, maybe it was somewhere in Texas where they're building these like tiny, like 900 square foot, 2-story homes with a loft, and they're like 220.
There's a lot of that in Atlanta.
And and I just don't know if people are going to be that thrilled to want to buy those, but I just don't know if they're going to be able to increase the supply enough to bring down the cost of housing. And I think our generation, millennials, Gen Zers, are just going to end up renting for the long haul. I think with the uncertainty of jobs, I think with AI coming down the pipeline and us needing to be flexible, I think many people are just going to rent because it's cheaper, especially places in DC, I can only imagine are probably cheaper to rent than buy a house, and then focus on investing. But there are still millions of people that should go the route of owning a home, especially if you know you're going to have a pretty solid job, your family's there, you want to raise a family. If you can comfortably afford the property, I still think it's a good investment to grab a home. Just don't buy too big of a home where it's going to make you house poor. But that's the conundrum that we're in. We're still grieving the American dream loss of the average person at a reasonable age being able to buy a home, and we're still kind of adjusting. So I don't know how many people are still looking to buy or how many people are just going to go on the renting train, but it's pretty 50-50 now.
I think it's the renting train. And then to your point of the smaller home construction and encouraging that's, you get the home, but that's not a super conducive place to raise a family if you have a loft in 900 square feet, right? I think the American dream is in an interesting place. I don't want to say, is it dead? Is it not? Because that's a heady question, but I think it's changed dramatically. Among my social circle in Denver, very, very few homeowners, very few children, from what I've seen. From the people I grew up with in Cincinnati, Ohio, a lot of home ownership, a lot of kids. And to me, it's so bifurcated, not just on policy and changes, but just cost of living where you are, because inflation is so different in different parts of the country. And ultimately buying a home and having kids is a financial decision in addition to an emotional one. So I think that is sort of the difference. And then the way I'm thinking about the American dream right now, and I'll bounce this back to you, Freddie, is focusing more on what you can do with individual people to help them versus just like, what is computer work that I can do to broadcast? Trying to build your own business, not to make, 3 million, 10 million, 50 million a year, but what could you do that maybe makes like 200,000 to 500,000 in profit? That's how I'm thinking about it. What can you do to set up one additional stream of income in addition to what you're doing already? And if you can do that in a lower cost of living area, like congrats, you got the American dream.
100%. I mean, if I was in a different, I've been trying to convince my wife, even though I love Florida, we're both like, I have a podcast, I'm doing content and the author stuff. And so I can pretty much work from wherever. And my wife has a podcast as well. And I keep trying to convince her to go back to Ohio because I'm like, look at the prices here. I'm like, we could probably save $3,000 a month by going to Ohio. We could, get a house there. We could be, but she doesn't want to go to like a smaller town where I would be okay with doing that. But that's the advice that I give to a lot of people is temporarily, even if you don't want to go there forever, there is a lot of places in America that you can still rent a house for like $1,200. Even if you go there, do remote work, build a podcast up or work on your dream, it's hard to work on your dream in a $4,000 apartment. Oh, it's killer. That money could be going into ads, equipment, or whatever you want to do. But for those motivated individuals, ambitious individuals, creative individuals, entrepreneurial, sales, this is a really great time to build and win. And if you can get your cost of living down and go somewhere else temporarily to build, I think that's the American dream is keeping and maybe not even a house, but I think the American dream now is about having the freedom to pursue ideas and opportunities. Because things are changing so fast. I want the freedom to be able to go, oh, like if you guys were like, hey, we should go do this show in DC, I want the freedom to go, I actually like this idea. Let's go and do it, rather than, oh, unfortunately, I can't because I'm not set up to X, Y, and Z or whatever it may be. I think we need to be on our toes and stay flexible. But that's for a portion, again, of Americans. The people who kind of get caught in the rat race, their story's a little different. But I do think it's important for us to continue to encourage people to go build something, because that's going to be your quickest way out before my 10% gross revenue tax plan is implemented.
One question I want to ask Freddie on a personal level is, like, in some ways you achieved the dream that thousands of people set out to do and very few are able to, which is that you became a working actor on a soap opera. And I imagine, like, that's decent money. It's extraordinarily difficult for anyone to make a living by being a screen actor. And you've pivoted, and I don't know if it's possible, but like, I'm sure there's a version of your career where you could be riding that, doing like autograph conventions, trying to get bit parts here and there as an actor, and being able to make a decent living. But you've like performing an entire career pivot back toward the real economy of, doing real estate, setting up a podcast, which is not the real economy, but like doing real estate, talking about real things that affect like middle-class people. I just like, why?
Well, I think it just became that I when I got let go from the show, I had just been basically burnt out. I mean, I was able to pursue my dream. I left high school. I grew up from a blue collar family in a small town in Ohio, and I moved out to LA 3 weeks after graduating high school. And so I was in LA for 15 years, grinding, working, doing commercials, doing television, made a few $1,000,000 and did very well, but had some major setbacks. One being a business manager who stole all my money and really set me back for a few years there. And once I was let go and COVID happened, I was just like, let me just go take a break. I need to clear my head. But I mean, acting's not off the table. I just got super passionate about this, and I've always done content. So people are now getting to know me because I, over the past 3 years, became like a niche. But I've been doing content professionally for 12 years now. So it kind of itches the creative itch for me. But yeah, I think the podcast, I think acting and continuing to be passionate about what's going on in the middle class is just important. So I think I can manage all three, because as an actor, most of the time you're sitting around anyway, and it's really nice to have a podcast and have a passion that can help people, and in between your auditions and in between your work days. So
can you also manage a run for Congress, or is that too many things now on top of our sitting on the lot?
No. That would have to be the number one priority if I ever went that route. But I don't think I'm anywhere near that at the moment. But it's definitely something that I was like, I wonder if in the future that'd be something I'd be interested in. But right now I'm just on this wave, man. I never set out to write a book. I was just making content and showing people what I was learning and talking about the numbers. And because I am a storyteller, I was able to basically take a bunch of boring information and make it interesting and shareable. It went viral. A literary agent in New York was like, hey, you should write a book. I have 2 Gen Z daughters and this would be amazing. I'm like, cool. Can you help me? And she goes, yeah. We made a proposal. We pitched it. I ended up getting a book deal, wrote my first book ever. But this is the first thing in my life that I never had on my bulletin board that I'm like, I'm working towards this like I did in many other aspects of my life. So this is a very unique, really special thing that's happening, because it's kind of like the world brought it to me rather than me chasing after it. So I'm curious how this whole thing is going to develop after the book releases and see where it takes my career.
Information shared in this recording and by its guests represent the views and opinions of the guests and does not represent the views or opinions of the host. This content has been made available for informational and educational purposes only. This content is not, nor is it intended to be, a substitute for professional financial advice. It is always recommended that you seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your personal financial situation.